The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Greetings, everyone, and welcome to the Sirius Report Market Wrap-Up for Wednesday, September 18th, 2024. Yes, today is Fed Day, and there was quite a bit of a surprise of what Chairman Powell did, and we're going to get into that a little bit down the road. But with that being said, let's go ahead and take a look at how the markets fared before, leading up to, and of course, after the Fed announcement. Well, if we take a look at the Dow, it was pretty much flat, remaining in the red for most of the day. Then we got to 2 p.m. Eastern time. And it was interesting because probably about 15 to 20 seconds before the actual announcement, the stock market, the Dow shot up about more than 250 points because obviously some on Wall Street get the news before others, and the algos were in session. It was a roller coaster after that. Within moments, it was back down to flat, back up to 250, back down, up, down, up, down. The selling by the high frequency trading computers was hot and heavy. Inevitably, as we got to the final part of the day after the Fed press conference and questions, it ended the day minus 103, sort of what I was implying perhaps yesterday, that it's a measure of buy the rumor leading up to the Fed rate cuts and then sell the news. And the Dow was obviously down 103. The S&P 500 was down 16 points to 5618. NASDAQ ended up down 54.76, closing out the trading day at 17,573. Now, the bond markets did get some movement up, and it was on the back end of the curve. Starting from the 2-year through the 30-year, we had a boost in rates, implying that there may be a bit of inflation coming down the pike. The 2-year ended the day at 3.628, up 0.036%, and the 10-year was at 3.713, extending the difference between it and the 2-year, up 0.069% on the yield. In the dollar markets, well, the dollar was flat for virtually until the announcement, and then it fell like a rock down to, about 100.4. Then we saw a spike back over the next hour to actually go above 101 and closing out the day up just 5 cents at 100.94. Meanwhile, gold also figured into the roller coaster. It was running relatively flat. There were times that there was a sell-off right when COMEX opened at 8 p.m. Pacific time. Then we had the jump up after the rate announcement. Silver got up to 31.29, and gold hit an intraday high of 2,690 cents. Immediately after, when Powell started talking and the high frequency trading computers were latching on to every word of the Fed speak, it shot down about $30 after being up 36, and silver was knocked down to 29.66 from that 31.29, but it closed out the day above the 30 handle at 30.14. Meanwhile, gold still remained above 2,500 at 25.59. Cryptocurrencies really didn't get much of anything. Bitcoin for the last 24 hours was actually about as flat can be, up 0.01% to 60,319, and Ethereum was down 0.5% at 2330. Meanwhile, the oil prices, oil was in the green before the Fed announcement, and it ended up just a little bit down in the red. WTI crude was down 28 cents to 70.91, while Brent crude was down 77 cents to 72.93. The fascinating thing is, before we started doing these market wrap-ups, oil for about a 2 to 3 week period was in the 60s. You would think that that would be the perfect time for the U.S. government to start buying on the market to refill the SPR, the Strategic Petroleum Reserve, but they didn't. And now it comes to find they don't have any money allocated for it. The Energy Department has just $841 million left to buy crude for the SPR. That's not even going to buy a few million barrels. That money would be enough to buy around, 12 million barrels, but relatively for what they've dumped, it's a drop in the ocean. Considering that the SPR is only just over half full compared to its capacity of 700 million barrels. So this is going to be something as inflation starts to come back, rates start to come down, inflation comes back, the economy really doesn't do much, depending upon what Congress does in its fiscal policies, but there's a good chance that we're going to see oil prices really start to spike. Most of the analysts, including Goldman Sachs, are saying that we could get $100 before the end of the year. Well, a piece of economic data before we get into the big stuff. Housing starts and permits surged in August in expectation of the rate cut. After an unexpectedly large decline in July, August data for housing starts and building permits rebounded well above expectations. Starts rose 9.6% month over month, while permits jumped 4.9% month over month. Both prints are the highest since February. Now, it's not just the rate cut expectations, but it's also the fact that August is really the time to get back into school. So if you're going to buy a home, especially after moving, that was the month to do it. Okay. Powell came out from the FOMC and announced a 50 basis point rate cut. Despite only 9 of 113 economists expecting this, Powell and his pals did it. At the same time, they slashed their dot plot expectation for rates, despite not adjust growth expectations, barely adjust unemployment, and hoping for lower inflation, which they will not get. All of this 2 months before the election, and this is the first rate cut immediately before a presidential election, going back to the 1960s and Arthur Burns. Now, what's the significance about this? It's not the 50 basis point cut, but it's what happened at the press conference. Most of the Fed speak pretty much was contradicting himself over and over and over. But Powell unleashed this chaos in the markets while at the same time saying there's no crisis at all. So why did you do 50 basis point rate cut if there's no crisis, and instead just do a quarter point rest for a couple months and see what happens? According to Powell, the U.S. economy is in a good place and our decision day is designed to keep it there. Well, not really, because you should have, if this was, there's really hadn't been any change except for the outlay of jobs, the revision of the jobs unemployment rate that happened last month, and you should have probably cut in July a quarter point, maybe a quarter point now. What suddenly changed that you refuse to tell anybody about? Well, the next time the Fed meets, voters will have cast their vote for next president, and Powell is then going to have to really question the decisions that they made. Looking at something interesting, there's a new trend that's coming around as job openings start to shrink. And going back to the end of the pandemic, many people who had gone and done work from home were being forced by corporations, primarily big companies, to have to come into the office to work, and they balked at that. And one of the things that you started seeing from the millennials and the Gen Z who were in the corporate world was something called quiet quitting, which means that they'd be at work, they get their paycheck, and they'd only do barely enough to get by and keep their jobs. Well, something that hasn't been seen in a while in the job markets, probably going back to 2008 to 2011, is being seen by corporations, and it's where they're ghosting job applicants in the middle of a hiring process, i.e., they put jobs out on LinkedIn or any of the services numbers of people apply for them, and in the middle of the process, they just remove the job from the listing. So people have already dedicated time, dedicated resources, and the company never really intended to do it to begin with. Companies used to do this back in 2008, 2011 to try to keep a database of individuals applying who they might make offers to down the road when they have an actual job that they need. Well, by then, most people have already gotten on somewhere else, and the chances are they're not going to quit their job just to take another one that may or may not pay more. But now companies seem to be just limiting the middleman, and in the middle of applications, if they get too many for a job listing, they just remove the job listing and ignore all the applicants. Welcome to working for somebody else. There was one time I made a comment of, who is your true master? The one who rules you or the one who pays you? And when you work for a company or work for somebody else, your life is at the behest of the one who pays you. Well, one of the interesting things that is coming up, of course, a lot of the political rhetoric, is looking at tax proposals for corporations. The Democrat side, of course, wants to raise corporate taxes, claiming the rich don't pay enough, raising corporate taxes to 28% or higher. And on the Republican side, one of the proposals is reducing tax for corporations from 21 to 15%, but only for companies that do not outsource, offshore, or replace American workers. This goes back to 2016 and a discussion we've had about how can we get America back to having production, manufacturing, and the like. And the reality is you can't. You can't, because the cost of living for labor is just way too high compared to what it can be for the rest of the world. The only way you're going to do this is if you fix the monetary system. And by the monetary system is this fiat currency dollar, this government spending that devalues the currency, the Fed using lower rates to try to prop up financialization until you fix the dollar. And we already saw this in the 1970s with stagflation. You are not going to be able to provide a cost of living adjustment where people can then work for lower wages and still be able to have a decent quality of life. So you can cut the taxes all you want. Corporations are simply going to go as they have since 1996 when GATT and NAFTA were passed. They're just going to go for the cheapest labor, and unfortunately, it's not in the United States. Just ask California, who bumped up minimum wage to $20, and businesses started closing en masse. Well, speaking of quiet quitting, Germany has now experienced what the United States did after the pandemic. Germany's employers are reaching for a new trick to get workers to clock in: a cash bonus for not calling in sick. In fact, Tesla, who has a manufacturing plant in Germany, is leading the charge, offering workers at its Berlin plant up to €1,000 just to show up. So quiet quitting is really hitting Europe, and it's kind of funny because ever since the pandemic, and there's a number of companies that just recently this week also came out and demanded that work at home is done. Well, obviously, I would question and take a look at their ESG policies and say, if you were for the Green New Deal, you would want as low a carbon footprint as feasibly possible. So that means people working at home. But no, it doesn't work that way. It's rules for thee, but not for me when it comes to the corporate world. And we find this in the banking system, as Lazard's chief executive officer, Peter Orszag, doesn't seem to be bothered by recent complaints of junior bankers being overworked on Wall Street. Matter of fact, they are proclaiming, nobody surveyed the young bankers, they are proclaiming that young bankers are actually asking for longer hours than the 80 to 90 hour work weeks they currently do. It's a sad state of affairs when, go back to the 1800s when you had the miners and the strikes and the overworked, underpaid individuals, workers who built America during the Industrial Revolution. They were working 12-hour days, 6 days a week, along the same line, 72 hours. But now it's like, we'll just offer you a little bit of money, but we have the expectation, if you want to remain on Wall Street, you're going to work 80, 90 hours, have no actual life outside of the workplace, and God forbid, you try to have a family, a child, etc. Maybe that's why, if you want people to work that way, then facilitate them working anywhere they want, where they can afford the standard of living, and do it from home. Anyway, I want to thank everybody as always for stopping by on this Wednesday, Fed Day, to get your market wrap up for September 18th, 2024. I want to thank everybody here at the Sirius Report community for being a part of what we're trying to grow. And don't forget to subscribe, share, comment, tell anyone you think this might be beneficial to. And until the next time we get together, have a great day.